Hey everyone, so in this video we're going to be talking about capital expenditures and specifically the two types, growth and maintenance capex. So this will be the first of either a two-part video or a three-part video, I haven't really decided, going over different types of capital expenditures, how they work, how you can differentiate between them, and finally ending off with this example and really seeing how you can calculate those two values based off some information that's given to you off of a company's income statement. So I know this question says what's the ratio of growth capex to change in sales, but I'll quickly just start off with what it means for a company to have growth versus maintenance capex. So growth capex basically covers any sort of capex that helps the company grow, or it's an addition to the addition in addition to existing capital expenditures that you already did in the past. So the best example I like to give is, let's say you have a machine like oil refinery equipment, for example. So growth capex would be something like purchasing a whole new refinery equipment, or purchasing a whole new factory or a new machine or anything like to help the company grow. So let's say you're an oil company, you purchase two new pieces of refinery equipment. You can like work faster, more efficiently. You help the company grow with that. But maintenance capital expenditures are those types or expenditures that are only invested in keeping or maintaining the existing ones. So if, let's say, every year you find that there's some sort of repair that needs to be done on existing capital expenditures. So if you have a piece of equipment that keeps breaking down every year that needs to be repaired or refined every year, so you'll basically invest money into keeping that one equipment. You'll send out money for that equipment to get repaired or anything of that sort. That's more maintenance capex. So that's sort of how you can distinguish between the two. And now let's start going over how you can calculate each, given something like revenues, depreciation, net fixed assets, and depreciation rate of a company. So this company says you have to find the ratio of growth capex into the change in sales. So that's basically a ratio, but we'll get to that in a minute. Right now, what we're trying to find out is growth capex. So just in case you didn't know, capex, actually I'll just zoom in here for a bit. Capex, or capital expenditures, can be sort of broken down into two major categories. That's growth plus maintenance capital expenditures. So all of the total amount of capital expenditures that you'll see, it either comes from growth, the stuff or the amount of money you spend sort of growing your company, versus the maintenance capex, the amount that you spend just keeping or sort of fixing up the equipment that you already have, not purchasing anything new. So now we can sort of, just from this financial statements, if you watch some of our previous videos, you would know that we can calculate total capex. We don't really know what the growth, the maintenance is, but we can get the total amount of capex just by looking at these numbers. And for just a quick refresher thing, so the capex, it can be given as, I'll just put net, that's basically the property, plant, equipment, net property, plant, and equipment in year one, minus net in year zero, plus depreciation. So basically this derives from a very simple formula, which basically says that if you move the net zero to the other side, you'll have net zero plus your capital expenditures minus your depreciation equals your net in the next year. Sorry, forgot to add the plus sign. And basically the year one would be the year 5 over here, and the year 0 would be year 4. It's just sort of convention where 1 and 0, 4 and 5, it's essentially the same thing. So just to make this a bit more clear and illustrative, I'll write out all sort of the key variables that were given. So let's say we need net 1. That's the net property, plant, and equipment the next year, or the year 5 for us. Well, that's already given to us. It's 89,549. 89,549. Perfect. We also need the net property, plant, and equipment in year 0. That's also given to us right here. 87,716. 87,716. Perfect. And now we're even given the depreciation amount, which is 28,995. And that's 28,995. I'll just convert these to dollar amounts because it's more technically, because they are dollar amounts. Okay, so now we need to calculate capex, and it's a very simple formula. I wrote it up there. So you can basically find that capex is what you have in year 1 minus what you have in year 0. You add back your depreciation, and this is the amount of capital expenditures you did. This amount, the capex, in year 5. That's fine, but we don't know what proportion of that was growth and what proportion of that was maintenance. But luckily for us, there's a formula for that. So here we have maintenance capex, and there's a formula for it. You need the depreciation rate over 1 minus the depreciation rate multiplied by the net of the year or the t minus 1, which would technically be year 4 in our case. So it's quite simple. All we have to do is plug in the formula. So I'll just put, M capex. So we're even given the depreciation rate here, 24.46, which makes our life a lot easier. In some cases you won't be, which means you'll have to calculate it yourself. I'll cover that in a future video as well. So 24.46%, perfect. So I'll move this down. Okay, so basically now we have to do is just follow the formula right above here. So it's the depreciation rate, which is 24.46, divided by 1 minus the depreciation rate times the net property, plant, and equipment in year minus 1. So that would be year 0 for us. Do that and you get 28,402. So now, just to be clear, we have two different numbers that we calculated here. We calculated capital expenditure and we calculated maintenance capital expenditure. So if total capex is 30,828, we know that 28,402 of that is actually just maintenance. So if you spent 30,000, 28,000 of that was just spent on maintaining what existing sort of investments that we already made in capex. So like repairs, fixing up old equipment, stuff like that. So now that's basically the process you had to follow. And simply enough, you can see that if you wanted to find the amount of maintenance capex, well, you could simply do the total amount of capex minus the maintenance capex, and that would give you the growth. So if you want to do growth capex, what you can simply do is 30,000 minus 28,402, and you get this amount. I'll just move this out. So what these numbers are basically telling us is, in year 5, the company overall spent $30,828 in capital expenditures. Of that, 28,403 was spent solely on maintaining existing expenditures we did in the past, so maintaining or fixing up old equipment, while 2,425 of that was actually spent on growing the company, so buying new equipment, buying new machinery, things like that. So that was basically going over the first part, calculating these specific values. And in the next part of the video, I'll actually be going over how growth capex specifically can be forecasted. And that's where I'll really explain why it's important to take a ratio of growth capex to the change in sales.